Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
Let's get right into it. It's been a while since we've done one of these. So
Can you hear me?
given the place that we are in the market, I think it's time for me to remind you. Remember, when everyone wanted the market to drop and everyone who missed out in 2020, and you were praying for a breakthrough to have your moment to then shine, to be able to invest, you should not be afraid now. Welcome to Market Mondays. Really quick, I want to shout out a couple people. So the Queen, I appreciate you for sharing this with me and being able to win your first trade. Let's clap it up for her and say congrats. Number two, my brother, I appreciate you for sending this to me. To be able to make your first $100,000 in one day is absolutely fucking amazing. I'm proud of you. What I will tell you is put 80% of it away, whether you save it or invest it into something guaranteed. You'll be happy if you did, because we've all been in trades that have won and we've been up, and then we start to deviate, and we'll talk a lot about that tonight. But stick to the plan no matter what. Please put in chat, stick to the plan no matter what. And this one, which is seeming to break the internet, kudos to the Queen to turn 2 million, 2.5 million into 50, and hopefully pretty soon we'll get an interview and break down this entire process for you. But tonight, I want to share with you the 29 lessons that I would share with my baby Xander about how to take advantage of a recession. I know some of you are panicking and you're seeing the market go down, and now some of you are experiencing your first real recession. And opposed to looking at it as a blessing, some of you are panicking. Please put in chat. People only panic when there is no plan in place. People only panic when there is no plan in place. So when you have a generational instance like this, and another one possibly coming in 27, and then the great reset that is going to happen, you have to be willing to take advantage of these. So look at these as an inside conversation that I would have with my son on what I would tell him exactly what to do. So let's go to some news items really quick. And I'll say this: you only want to get out of companies right now if you got in at a bad price or you don't actually believe in them. When the market is bleeding down this much, it shows you if you truly and actually believe in a company. Tonight, I want you to write a lot of stuff down. Okay? Rivian falls apart. So remember last week when I was saying, hey, there is no new Tesla, there is no new Apple, no new Microsoft, when people are hunting for these companies. And if you follow the process, like I've told you, to look at Andreessen Horowitz and the top venture capital firms, the top angels, you can see which companies are coming down the pipeline that could change the world. Right now, we don't have too many entrepreneurs. I'll tell you, the world is waiting for you to create an amazing company that changes the world forever, and you will become a billionaire if you do so and get the right funding and right team behind you. But Rivian falls apart. And when people are trying to be the second and third player in the EV space, this is why it's best to go with the top player and leave everything else to the side, okay? Of course, SPY and triple Qs are falling, the Dow is falling, but if you are able to trade or short-term invest, like we talk about on episode 70 and previous episodes here on Market Monday, you should be making a killing. Shout out to my guy P. P hit a big target in less than 3 or 4 minutes. So, traders, write this: I should be making more money during crashes than ever before. Please put that in chat. 30-year mortgage rates have risen to the highest rate since 2009. So those of you, remember when I told you a housing crash would come, this is a little bit of a delayed indicator. And it's a delayed reaction. The housing market turns over a lot slower than the stock market. But by next year, I think we will have a housing crash. And I want to take a look at these crude levels. So write this down. Every time that you look at a commodity or an asset, you want to look at least 50 years out. So if you look at here, mid-1980s, 1987, crude for this chart slid negative. Look at the area here, pre-2000, slid negative. 2010, slid negative. 2018 and 2020. Those are the areas in which you want to buy oil. And when we see these tops at 50, every time these happen, according to Jim, Not every recession is led by a 50% rise in crude, but every 50% rise in crude has led to a recession. In 1990, we see it was really bad. So when you look at the macro picture, you can easily tell when commodities are going to fall apart. The truth is, too many people are looking at too short of a time frame, and it's damaging your account by doing so. So here are the 29 lessons I would tell my baby Xander of what to do to take over and amass a fortune in a recession. Number one, you have to build an investment strategy that works in all market conditions. Write this down. If it does not work in the up market, down market, and sideways market, it is not good enough. It is not good enough. Number two, you have to be able to trade every market with it. Write it down. Commodities, equities, index funds, mutual funds, every commodity and tradable asset on earth, including something like this water. You have to be able to trade. Now, if you are long-term investing only and you don't know how to short-term invest, like I talked about on episode 70, please check it out. Classic shoulda went triple. You are at risk. And I'm just going to be honest. If you don't know how to trade during a down market, you're missing one of the greatest opportunities of your lifetime. Number three, for my baby Xander, please listen to me. Do what you love and focus on what you love, but you have to, one, invest long-term first. You got to put 70% of your money away until you're 30. Another little secret, no kids until you're 30, okay? Number two, you have to have real estate in some form. So whether on the consumer side, where people are renting from you to live, or in a commercial capacity, whether it's in what Uncle Ty is doing, or some form or fashion where it's commercial, where there's hotels, etc. But you need to have real estate in your portfolio. Number three, you have to have 8 businesses that require almost no human capital. Ideally, baby, you want businesses that run and you don't need anyone but yourself and automation tied to it. Number four, you have to have some software components that you own in your business that will allow you to scale faster and infinitely quicker than everybody else that you're competing against, okay? Number five, you need a tech company as well. And then the last one, you have to build one business that you see will be viable in 10 years that everyone may not see the value in right now. You only want to get out of an investment in the bear market if you do not believe in the company or you got in at a bad price. So Xander, if you're holding for your lifetime, a 30-year period, and you want to pass things down to your children's children, what you should be doing is buying at the best prices, only loading a boat. And if it's at a 80% off discount or 90% off discount, you want to put 85% of your money there, and the remaining capital you can place at other places like 50% if it's going back up. But you should only want to get out of a company in a bear market if you no longer believe in it or because you got in at a bad price.
This that Red Panda Anthem.
Ian, what's up?
This that Red Panda Anthem.
Red Panda, what's
This
good?
that Red Panda Anthem. Whole
boy.
clip going up. I know they can't stand it.